Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, the market is quite volatile today. The problem again has been in the mid caps. The index is down about 1%. Advanced decline at about 1:3. The Nifty is fine. I mean, yes, it's gone to 11,070 again and slipped from there. But it's at 10,985. So at lower level, there has been some support as well. Ashwani and Mitesh with us for BTST Calls. Ashwani, you go first. You reckon on the index now perhaps once again we'll move towards the lower end of the range, considering that we've rejected the higher end, or is there a possibility of testing that mark again? Basically, what's your index call now, and what about individual stocks?
See, index remains negative. Maybe, it could turn around if the mid-cap starts to turn around. But with this sort of mid-cap market, it looks a little difficult. 3 or 4 stocks are holding onto the index. But at least for the next half an hour and tomorrow, I expect the market to be a little soft. Now, one important thing I want to point out, crude is still down $5 from where it fell. Bond yields are lower. Then why isn't Bank Nifty showing follow through? So that means that now, good news is not really impacting, stocks like it was. So that way, I think next couple of days should be soft, and we'll have to see 10,930, 950 very carefully this time, because you've returned after a second excursion to 11,050. Having said that, Sun TV is a buy with a stop of 778, target of 800. JSPL is a sell with a stop of 194, target of 180. And BEL is a sell with a stop of 104, target of 92.
Okay, the bull's excursion. I like how Ashwani puts it. By the way, there are some stocks on the move. Just want to point out, look at KPIT Tech. There's a massive move underway on that one. And IIT Tech and Mastek, the ones that have reported, are still flattish. But the buyers are now crowding in on KPIT Tech. That's the one that's on the move. And maybe we can pull up a DHFL. Actually, some of the NBFCs all put together are moving higher. DHFL, then something like an Equitas is moving up. And Bandhan Bank is your stock of the moment. Good numbers from Bandhan Bank, decent asset quality, good NII growth. Markets taking note of that. So Bandhan Bank up 6%. We'll discuss that in a moment, but let's finish more of the trading ideas for the next half hour. Mitesh, your calls?
Two STBT calls. Escorts is a sell with a very tight stop at 876 for targets of 855. And Ashwini is pointing out the banking lot, and I think IndusInd Bank amongst them is also not showing strength. In fact, it's not really participated for the last few days. So let's say STBT with a stop at 1903 and look for targets of 1874.
Okay. By the way, just pull out the intraday chart of JSW Steel. Just look at that. I think there's a bit of a problem that we are seeing now in steel stocks. Started with Tata Steel, we've seen JSPL also. Now just look at JSW Steel. That's a big decline that you're seeing right now, almost 4.5% lower, and it's happening in one go. So big decline right now as far as JSW Steel is concerned. About 4.5% lower is what we have right now on that stock. Mr. Tilsen, your thoughts on what's going wrong with the steel stocks?
Anuj, honestly, no idea, because actually we have all been expecting the good numbers to be seen from all these steel companies, because if you see, the prices have kept hardening in the April and May month also, having seen the price increase. So I won't be seeing the numbers in any way lower than what we have seen for Q4 of all these companies, whether you talk of JSW Steel, Jindal Steel and Power Steel Authority, the larger ones I am talking. And in fact, if you see the smaller ones like Prakash Industries, Tata Sponge having declared the results yesterday, they've all shown the good results. So honestly, no idea of the fall which we have been seeing now.
Okay, big decline in some of those steel stocks. Mr. Tulsian, before we let you go, thoughts on the Bandhan Bank numbers? I think you've liked this stock in the past. It's done so well since its IPO. Any ideas or any thoughts on the numbers?
Surbi, I don't think that numbers have disappointed, but we have always found it to be expensive, and in fact, we have refrained only purely on the valuation parameter, because still, if you take this bank as this one, they are more into the microfinance with about 87-88% exposure, and it will take time for them to reduce this and rebalance their books. So taking that into account, I don't think that price to book of maybe 6+ or maybe closer to that really justifies buying in the stock, in spite of no disappointment seen from Q1 numbers.
Okay, Mr. Tulsian, we let you go on that note. Thanks a lot for joining us today. Ashwani, JSPL has been your intraday sell call twice today. Just look at that stock right now, 6.5% lower. You've been tracking these moves in the metal pack. Is this giving an indication of perhaps the cycle having turned? Because the declines are rather large now. If you look at stocks like even the non-ferrous names like Vedanta, and of course in ferrous names also, from the high point, it's quite a bit of decline now.
I would think so. It's trading now way below the 200-day moving average. High was 290 on JSPL. Now it's 185. Also, the mid-cap fatigue is now getting to even these steel stocks, which weren't probably the leaders of the decline. JSW Steel, if we break, say, 290, it breaks its 200-day moving average. So, the momentum type of stocks are really giving up gains. Tata Steel hasn't seen 650, 700 in a while. So I think metals probably has fairly strong momentum on the downside.
Prakash, just your thoughts on this as well? The way we are seeing these steel stocks decline and consistently now?
So, it does seem to be a bit surprising, Surabhi, given the fact that the macros, the headwinds that you anticipate from the Chinese actions where they've started closing down a lot of, or clamping down on a lot of other cities in China on environmental concerns for steel. Things shouldn't have looked so bad, but what seems like happening is that there's a valuation reset that's happening, and input side, cost pressures for the end user industries would put some pressure in terms of demand for most of these guys. And there's a lot of capex that has happened, a lot of capacity expansion that's been underway. So there would be some sort of a damaging effect in case the demand has to be subdued. So my sense is there's a shift in the PE multiples more than dramatically any EPS impact negatively which could be there. So you will have to bear this pain. The market will have to look at it differently maybe after a quarter or so. But as I think that the cycle could probably bring prices down even another 10-12% very easily from here.
Okay, prices down another 10 to 15% from here as well. Could happen. The stocks are making fresh lows, no doubt about it. We spoke about JSW Steel. Just look at that stock again. There's also Jindal Steel and Power, which is making fresh lows. I'll tell you something, fresh lows are being made in a couple of other stocks as well. I mean, just look at intraday chart of HDFC Bank. And that I think is the problem with the market now. Because, through the morning, this was one stock which was holding the market. And that becomes the problem when, it's almost like, Virat Kohli holding the team. And if he fails, or let's say, the 90s team when Sachin was the one who used to bat. And if he fails, then, what happens to the
whole team collapses.
The whole team collapses. And this, I think, from
That's
20
not a
to
good
20.
feeling, Nifty being the 90s team.
No, actually it has been. 6 or 7 stocks, Surabhi, on the Nifty have accounted for 10% of Nifty's gains and or 7% of Nifty's gains. 43 other stocks have actually led to a decline of 10% on the Nifty, and that basically tells you why the Nifty has been able to sort of get close to all-time highs while the mid-caps have suffered. So obviously the breadth of the market is very poor. The breadth of the market is poor not just in broader market, the breadth of the market is poor in Nifty as well. I mean, if you take a look at the year to date, I think only 13 or 14 Nifty stocks are in green. I could be wrong, but basically the point I'm trying to make is that more Nifty stocks are in the red than are in the green, even though the Nifty is well in the green. That's because of 40% gains in TCS, 25-26% gains in HDFC Twins. So that perhaps explains the kind of move that you're seeing right now.
Well, absolutely. That's the afternoon that we have at hand. By the way, don't miss the selling on Lever as well. I mean, yesterday this stock was punished about 3% on, after decent numbers because of valuation concerns. And that trend has continued today. Still down 2.5% on Lever. There's no great recovery from the lows. So again, that's one stock that's really not contributing at all to the upside. HUL is the one that I'm talking about, Hindustan Unilever. Anyhow, on that note, let's move to some market opinion. Earlier in the day, we caught up with Mahesh Patil, Co-Chief Investment Officer at Aditya Birla Sun Life Asset Management Company. Got his call on the market and how they're looking at picking mid-caps for their mid-cap funds at the moment.
So I think the Nifty is an all-time high, but the breadth of the market has been very, very bad. And that's reflected in the statistic, year till date, if you look at Nifty is up around 7% or so. But the mid-cap and the small-cap index is down by around anywhere from 15 to 20%. And even within the Nifty itself, if you look at, it's been a very, I mean, if you look at the large cap stocks alone, right, large cap will be the top 100 companies. That's what SEBI defines now. So within that, if you look at the difference between the Nifty and the Nifty Next 50, again, there is a difference of almost 8 to 10 percentage points. And I was just looking at some data. Nifty itself, okay, year till date, 5 stocks account for 120% of the Nifty gains. So they are more than the Nifty gains. So I think that's been of a challenge, because normally in the funds you would have stocks outside the Nifty to generate outperformance, which normally happens over a long, but I think in the last 9 months, I think it's been different.
Underperformance.
Yeah. So I think, yeah, so investors, again, not mid-cap, small-cap funds, again, would have seen slight erosion in the last 1 year or so.
I know you won't talk on individual stocks, but you know, this whole derating that you have seen of some of these good quality stocks. Of course, Ashok Leyland is more driven by the recent news flow. But would this be an example where you would want to sort of accumulate stocks at lower levels?
Yeah, I think that could be, again, there are individual stocks, there are different drivers, okay, which could be driving that. I think wherever there are short-term concerns in any stock, I think market has been very punishing. Even in the quarterly numbers, we've seen that, right? Any slight disappointment, the stocks have been punished. So I think, there could be a short-term, some negative news flow which could be there, which could have a short-term impact. It doesn't really change the longer-term outlook over there. Clearly, in those stocks, if there is a correction because of slight disappointment in the quarter, I think that's clearly a buying opportunity in those names. As long as the medium next 1 or 2 year outlook remains fairly strong, because we've seen that even in this market also, wherever stocks have got beaten down, and the companies have reported stable or good earnings, a surprise that stocks have also bounced back equally fast.
Your reading of the way market reacted to HUL and then the general call on consumer, nothing wrong with numbers, fantastic margin improvement, good volume growth. The stock chose to sort of, pass it off as already priced in. Was that a one-off, or do you think consumer as a universe is susceptible to a similar reaction because of elevated expectations and valuations?
Again, I mean, a stock like HUL will be a classic, one of those 5 stocks, okay, in the Nifty, okay, which has done very well. And the valuations there had gone, I mean, well above the long-term average. It could be 2 standard deviations above the long-term average. So it's more about a question about, I think, the rally what we've seen in the stock before the results. I think it's giving away some of those gains, rather than, I think, reading too much into it. I think overall in the consumer pack, the earnings growth should be fairly good going forward, because consumption is looking strong. Rural, even Lever also indicated that the rural demand has been fairly good. And yeah, I think the stocks might, I mean, some of the consumer stocks have done well. I mean, Lever was one of them, but others have also done well. Where you might see some time correction over there, because the valuations have already factoring into some of this thing. And if at all there is a broader concern in the market, I think normally these stocks tend to hold on pretty well in that kind of environment.
Overall, are the results, I mean, it's not a great deal of results that have come, but from what has come, are you having a conviction that this is one of those great V-shaped years?
No, it's not going to be a V-shaped year, but clearly I think the earnings growth is starting to show up across the sectors.
So you're going with 20
Yeah, so we are going at around 18% kind of a number for this year, which again, this quarter, the base is also very favorable. So the numbers might look very good in certain cases, like you mentioned in case of Lever. That's not the actual. That's why we are looking at growth on a 2-year basis. So you look at FY18 vis-a-vis FY16 or not 17. And that will be a good indication in terms of what kind of a growth traction you are seeing in those names. But by and large, I think the numbers should be fairly good in this year and across sectors. I mean, we've seen auto numbers have been fairly good. Consumption is looking up. Even banking and financials, the private banks, NBFCs, there was some concern, but the numbers, I think there should be also fairly strong. Metals, despite some correction in the metal stocks, we haven't seen too much of price correction over this. That should also be fine. IT numbers, which came in, which TCS reported again, was fairly, I mean, good than, slightly better than expectation. So I think we are fairly okay. We're not seeing any big V-shaped recovery, but clearly the trajectory is improving from what we have seen in the past few years.
Welcome back. For the Nifty, things haven't changed much. In fact, there's some attempt to get back towards that 11,000 mark, but the one stock where there is no sign of recovery whatsoever is Ashok Leyland. Take a look at it, 14% down. That's the kind of cut that it's looking at. Stock is at a 110, absolutely no respite, Anuj, on this one at least.
Yeah, I mean, I think there are concerns, obviously, Surabhi, but perhaps this is the kind of time when you look at your portfolio and believe that if you're trying to buy the stock at 160, 170, the low was 85, 86 from there. I mean, it's almost there now. I mean, it's a and it's a bit of a cyclical play right now. So obviously, there's quite a bit of damage right now. Traditionally, historically, you have made most money by buying into Ashok Leyland in panic. Whenever there have been negative news, BS4, whatever, this kind of news. But in the near term, obviously it looks like there's some pain. I mean, this is severe derating. Just 3 or 4 days back, it was at 135.
Oh, absolutely.
Now at 110. I mean, and this is a large stock. This is not a small stock that we're talking about. A large cap stock falling 14%. I think it's a bit surreal. It's telling you what kind of market we are in right now.
Oh, absolutely. So, Prakash, I'll make this my last question to you. Stock is down, some 17-18% in just 2 sessions alone, probably more than that. Buy this dip on Ashok Leyland, or not so convinced?
No, I think I'm convinced that this is not a story just because they shared a little bit of a erosion in market share, and that to Tata, which is an incumbent gainer in this case. And we've not seen Tata Motors do so well in spite of them doing all these gains. So, I think people tend to overreact when you are in this kind of a market situation. And the big problem, Surabhi, is on a bad piece of news, when the selling comes, there are no takers, there are no buyers. For some of these names, unlike what we saw last year or even just a few months back. So that's one of the reasons why your own selling tends to push the stock down, and that liquidity erosion kind of complicates or compounds the issue. So I don't think it's a valuation issue here. It's more of a technical setup that's weak. The texture is weak. So any sell-off would kind of be much more exaggerated and accentuated. But I would recommend a buy at these dips, because these are days when you actually get. You had Hinduja Foundry news. You had the BS4 issue. You had GST pre-stocking woes. Every time this has happened and we've seen the stock recover, maybe it could go down to 90, 95. I don't know. It only becomes more attractive, but you can't miss out on this dip.
Okay, Prakash, we let you go on that note. Thanks a lot for joining us. The Nifty has dipped below 11,000 with mid-caps continuing to feel the heat. To discuss the same, we have Jay Bala with us on the phone line. We're supposed to join us in studios, but we have had some technical difficulties. Jay, hi, good afternoon. So your thoughts on the big dichotomy that we have seen? The index, of course, still okay, but mid-caps falling quite a bit.
Yeah, the mid caps and the small caps are coming to a very important support, and it's very likely that we're going to see some sort of a bottom for the larger spread of stocks, and we're going to see the market get larger breadth, and it's probably a matter of time, and slowly we've seen pharma, select auto stocks, and RI, HDFC, yes Bank. The names are going to spread within the private banking space, and more participation is very likely.
Okay, by the way, just pull out JP Associates. Yeah. I think we'll have the flash on the screen very soon. The shareholding pattern of JP Associates has been released, and Rakesh Jhunjhunwala has nearly doubled his stake from 1.23% to 2.06%. So, Rakesh Jhunjhunwala has been buying JP Associates. There's been, of course, issue with JP Associates coming up in Supreme Court, and if they're able to pay off that JP Infra,
the home buyers.
Yeah. I think that really is the reason where a lot of people are taking this aggressive call. But this is Rakesh Jhunjhunwala putting fresh money to work in the quarter and actually almost doubling his stake to about 2.06%.
Absolutely, that's a stock that's definitely making headlines. It's climbing as we speak for obvious reasons because of a marquee name coming in and increasing stake in the company. So JP Associates on our radar. Stocks, of course, just 15 rupees even now. Still has a lot of legal hurdles to clear before it can come back to business, so to speak. Jay, another stock that we've been debating and discussing all through the last 1 hour is Ashok Leyland. There's been very serious price damage in the last 48 hours. Okay, I don't think we have Jay with us immediately. Let's do one thing. Let's see if we can try and play those sound bites out, because we did catch up with the Ashok Leyland management to try and understand, the facts behind this loss of market share. Not only is there concern on the overloading order, there's also concern about the fact that they've lost market share on medium heavy commercial vehicles to Tata Motors in Q1. That's not something that the market has liked too much. Almost 15% down on the stock. Let's hear the management.
The market share for the current quarter is 30.2. This is on MHCV segment, and we have fallen approximately by about 4%, 4.5%. But on LCV, let me share with you that we have gained market share. So LCV has done wonderfully well. It has posted a 34% growth in volumes, and we have moved from 15 to 16%. We could have showed up market share by giving more discount and also pushing stock into the system, but we decided to kind of abstain from this strategy at all. I mean, we said that we'll have to grow this business profitably, and if we were to do that, if we had to walk away from deals which were very clearly unprofitable, and giving negative margins, we decided that we'll have to let some of the business go. At the outset, let me tell you that I don't see any necessity for us to get extremely worried or panic about the situation. If it is only prospective, I think the impact for the industry is not going to be so hard as we think it is, because everybody would change to the new norms, and in fact the country is typically is an overload country. So if the government is actually going to monitor overload very strictly and also ensure that the new norms are implemented, it could actually become positive for the industry.
Okay, Jay, have you looked at the charts of Ashok Leyland? I mean, it's been one of the flag bearers of the mid-cap rally of last year, and big decline right now.
Yeah, it's coming very close to an important support. We're going to see, very likely to see Ashok Leyland bottom around 109 to 105. So, there's a good chance that post that we're going to see record highs for Ashok Leyland. But, the best at the moment is actually Maruti. We've spoken about it a few weeks back, and Maruti is heading for 11,000 plus. And given the fact that people are feeling so left out and the rally has been so narrow, we're going to see a lot of power in the stocks that are already performing well.
Okay. Jay, on the Nifty itself, I mean, you've always been convinced that, new highs and new breakout should happen. Do you, A, retain that view? And the question is, which are the stocks that are going to take us there? Will it be the same clutch of Reliance, HDFC Twins, etc.? Or do you see participation, fresh participation from new names also coming through?
Yeah, the banking stocks are not going to make record highs, not all of them. As I've been repeatedly saying that, private banks are much stronger than the PSU banks. But what has happened as of yesterday is that the PSU banks are likely to see very large relief rally. So that itself will be a big contribution, and you'll see record highs come through for private banks like HDFC, which we have been projecting a level of about 2,500 plus. HDFC Twins are doing well. HDFC Limited is actually coming to some sort of resistance, but I would tend to think that HDFC Bank is more stronger than HDFC Twins, and HUL is got more strength, but in the short term we're going to see a little more correction, and further record highs are likely to come through. And so HUL, Reliance has a possibility that it can extend to 1265. I've been saying this since the time it was about 550, I guess. So the rally is very likely to spread to larger, to be much broader one than what we've been seeing the last few months.
Okay, just stay on. We'll take a break and be back and discuss some more stocks with you. Welcome back. We're still in conversation with Jay Bala. So, Jay, among index stocks, which ones do you like right now at current levels?
Yeah, Maruti is my top pick within the index stocks, and Reliance, you got to lighten up on Reliance, and it's very likely that you're going to see, much bigger upsides in Reliance. And HDFC Bank, Kotak Bank within the private banking space looking pretty good. Yes Bank, I've been bullish since the time it was 330, it's come to 380. Even that's heading to about 400 to 425. And we're going to see metals start to rally. We've seen, I've been bullish on Shanghai, and Shanghai is likely to see at least a very large relief rally. That itself is likely to lift metals. So, and once metals start moving, we're going to see much larger participation. And within the metal space, Tata Steel seems to be the best at this juncture. And outside the main stocks, you can look at Tata Metallics. It's likely to be a doubler. We had picked the stock in CNBC around 90 levels. From there it went to, it became a 10-bagger. So this is a third opportunity this stock is presenting.
Okay, interesting thoughts there. Jay, thanks very much for joining in. Jay is saying that metals will turn soon, particularly ferrous. Today, Tata Steel is at a 52-week low. So let's see how that turn actually happens. Thanks, Jay, for joining in. Let's bring in Deepan Mehta into the conversation as well. Good afternoon, Deepan. My stock to you would be HUL, Hindustan Unilever. Suddenly the market's getting concerned about valuation. I mean, when we were earlier talking about a move to quality, nobody said, people said, you know, valuations, I mean, these 45, 50 are the new normal. What's changed for Lever now?
Well, it's not any longer 45, 50. It's more like 70 times trailing and maybe 60 times current year earnings. And that certainly kind of puts a ceiling on how far the valuations can go up for a mature business like HUL. And therefore, I think some concerns are creeping in. As also the fact that one unnoticed statement is that the last 6 weeks sales volume growth is about 5.5 to 6% as per Nielsen, which is what the HUL management has disclosed. And that would mean that the kind of 12% and double-digit volume growth which HUL has actually reported in its quarterly numbers may not exactly be sustainable because of the base effect. And the management also was not completely sure that they were in a phase where they would see consistent double-digit growth. So on one hand, you have at least some uncertainty as far as volume and value growth is concerned. And on the other hand, you have valuations which are like, you know, price to earnings growth are significantly higher. And even from historical standards, the price earning multiple of HUL is on the higher side, which is why I think some amount of selling pressure may have taken place in HUL over the last trading session also.
Okay, Deepan, hi, good afternoon. I think I've asked this to every guest today. Ashok Leyland, are you buying it at 110? 3 months back, you know, 150 would have been charitable. Now 110.
Well, I think my understanding is that some big institutional investor may be liquidating their portfolio en masse, and that can only explain this sort of a correction. Ashok Leyland, mind you, had been an institutional investor favorite over the past 2-3 years because of its performance and the way it built its market share over its peer group, as well as the kind of distribution spread which they accomplished, export as well as sales to defense. So there were many positive variables going for Ashok Leyland, and that's why it outperformed. But now I think some chinks are coming into play. It's difficult to answer whether at this price one should buy or not. Generally, as a common sense rule, when the stock prices drop so much, it's just better to wait and watch and see what the exact where the bottom is being formed, and maybe look at buying it afterwards. But specifically in auto industry, I think there are better picks, and our preference has to be for stocks like say Maruti or Eicher Motors, or even for that matter TVS Motors looks quite interesting, rather than something like an Ashok Leyland, which is basically cyclical in nature and could be a value buy, but certainly not a growth stock.
In fact, let me take that question to the technical experts. Actually, I was going to ask you this anyway. Now, the portfolio guys were thinking of buying this dip on Ashok Leyland. I mean, how do you approach a falling knife? Where do you begin? How do you buy it without, you know, cutting yourself too deep? What should be the approach to Leyland for someone who's looking at adding it to the portfolio?
See, basically, you have to allow these things to fall and go sideways, something very similar to Shriram Transport. Now, the previous such event was when this Ashok Leyland was 80, 85. In this kind of a market, it's very easy for it to approach those levels. From there, you know, there's a strong support, and you tend to, you know, make money from there, because nobody is saying that mid caps have bottomed out. So chances are Ashok Leyland will get back to 80, 85. If it gets back there, then it's a long-term buy. Otherwise, you know, on a 14% down day, yes, you can start buying, but I don't think this is the low.
Okay, all right, gentlemen. Well, we've got 1 minute to go before the day closes out. I mean, not much has changed. What is your interpretation of this day? Pretty much all-round weakness today?
I think the 2 or 3 key takeaways are that, you know, the market's dependence on HDFC Twins, TCS and Reliance is now making the Nifty also a bit vulnerable. You saw what happened with just one bit of move in HDFC Bank towards the end, Surabhi. So that's point number 1. Point number 2 is that there's a bit of an issue with the broader market. I mean, with stocks like Ashok Leyland start to fall 10%. Now, you know, we might be reaching a stage where portfolio investors now have to just, you know, take notice and start picking up some good quality stocks. But, you know, and with hindsight, perhaps we'll find out that this was a good level to buy. It does not apply to small caps and, you know, rank mid caps though. But yeah, I mean, it's a bit vulnerable, this market, absolutely no doubt about it. And of course, 11,070, you need some big trigger to take that out. Just crude falling is not enough. In terms of individual stocks, of course, today, metals were down. Tata Steel, Vedanta, Hindalco all down about 3 to 5%. UPL down 2.5%. Tata Motors down 2.5%. Levers been a bit of a problem point for the market, down 2%. Axis was down 2%. M&M down 2%. ICICI down about 1%. On the way up, Indiabulls Housing was up about 4%. And of course, the oil stocks, upstream, downstream, both did well. So ONGC, BPCL, HPCL, IOC doing well. Mid-cap market, of course, there was Ashok Leyland and there was this other market.
Oh yeah, absolutely. It's not a good screen today on the mid-cap side. I mean, you've got a 200-point cut on the index. Let's get the main stock of the day on your screen. That's Ashok Leyland. It's down about 14%. But it's not just about Ashok Leyland. There are lots of stocks that have fallen in how. Look at the fall on HT Media in the last few minutes of trade. Stock is down 17%. I mean, these are the kind of declines that we're talking about in the mid-cap market. NIIT fell about 5.5%. Some of the milk stocks like Parag, etc., they have completely moved away from the kind of levels that they were quoting at yesterday. Prabhat Dairy is down 10%. Parag is down 5-6%. MRPL, which was such a big shooting star yesterday, today there's profit taking on that stock as well, about 3% on the lower side. What else is weak? DLF has lost about 5%. A lot of these PSU banks, no excitement. Morning they started off with such a bomb, with such a bang. And look at it now, OBC 4% lower, Union Bank 5% lower. Let's pull up Andhra Bank, some of these names, PNB, where there's talk of capitalization. None of that talk has really helped in terms of the share price action today. If I talk about some of the other key stocks on the lower side of the screen, you'll find at Tata Global Beverages, a 4% decline there. JM Financials is down 3.5%, thereabouts. Bharat Forge has lost 3.5%. NCC is down 3%. It's a long list of losers. India Cements, 3% on the lower side as well. On the, and JSPL, let's not forget. So commodities and metals in particular, very weak. JSPL included, 6% down on that stock as well. On the upside of the screen, Bandhan Bank really stands out, 7% on that stock and counting. NIIT Tech, let's pull up the result reaction stocks. NIIT Tech has managed about a 0.5% increase. Mastech has managed about a 0.5% increase. So those are some of your result reactions of today. Very good day for future consumers, 7% up, big surge on that stock. 8K Miles, another tech name which reported 6% up on that stock. KPIT Tech has had about a 3.5% up move. So another day where mid-cap technology has seen some buying, but beyond that, I don't see too many winners or gainers on the upside. And of course, Ashok Leyland continuing to make headlines today. Anil.
Oh yes, fair enough. Let's take some final thoughts then. Ashwani, what's the verdict for the day then?
See, still we are range bound, but it looks difficult how we can get past this 11,050 without any improvement on the mid caps. So for the moment, let's see which side of the range we breach. It is a possibility that if these large caps, 4 or 5 of them, which keep going up, if they break, then 10,930, 950 may be vulnerable. And possibly in the second move down, it is more vulnerable than the first time.
Okay, gentlemen, unfortunately, we have to cut short our conversation. Thank you very much for joining in. The Ultratech press meet is underway, and I believe Mr. Kumar Mangalam Birla is speaking. Let's listen to him.
Pace of execution under the low-cost housing program have supported strong volume offtake. Even then, FY 17-18 was a year of challenges. The ban on sand mining and the use of pet coke in major states impacted construction activity and operating costs, respectively. The hike in import duty on pet coke from 2.5% to 10% and the increase in diesel prices pushed freight costs up, resulting in higher operating costs and impacted margins downwards. Growth in the cement sector is expected to be around 8% in FY 18-19, indeed good as compared to the trends of the last few years. A slew of infrastructure projects announced by the government which will spur growth levels comprise of construction of around 84,000 kilometers of roads by 2022, construction of rural roads, housing for all by 2022, the metro rail networks in several cities, the bullet train and irrigation projects to cite a few. FY 18 was quite a turning year for your company. Among these, there are 2 notable areas. One, the acquisition of the 22.1 million ton cement capacity of Jayaprakash Associates Limited and JP Cement Corporation. The acquired plants are in Himachal Pradesh, Uttar Pradesh, Uttarakhand, Madhya Pradesh, and Andhra Pradesh. This acquisition expands the geographic footprint of your company. It enables entry into the high-growth markets of India, where greater reinforcement in your company's footprint was required. It enables us to create synergies in manufacturing, distribution, and logistics, and in achieving economies of scale. Besides reducing lead time to markets, it augments our competitiveness and benefits our consumers. The transaction, valued at rupees 16,189 crores, is the largest cement deal in India to be concluded so far, involving a major financial restructuring program by the banks. The second turning point is the successful commissioning of a 3.5 million tons greenfield cement capacity at Dhar in Madhya Pradesh. The clinker plant and the first cement mill were commissioned in a record time of less than a year, setting a global benchmark. This plant provides a strategic advantage to your company for catering to the growing cement demand from Madhya Pradesh's main industrial belt. A waste heat recovery system of 13 megawatts will also be commissioned later this year. After commissioning another 4 million tons of grinding unit in Bara, Uttar Pradesh, your company will become the third largest cement company globally, excluding the Chinese players. I would like to brief you on yet another major development. Your company's board of directors, at their meeting held on 20th May 2018, approved a scheme of arrangement amongst Century Textiles, your company, and their respective shareholders and creditors. It entails demerger of the Century Cement business into your company. Century Cement business comprises of 3 integrated cement units in Madhya Pradesh, Chhattisgarh, and Maharashtra, and a grinding unit in West Bengal. The transaction gives your company the opportunity for strengthening its presence in the highly fragmented, competitive, yet fast-growing areas of East and Central India. It also extends its footprint in the Western and Southern markets. Other advantages stem from ready-to-use assets, a strong distribution network, availability of land, railway, and other infrastructure. The acquisition is expected to lead to greater shareholder value creation and is expected to be completed in the next 6 to 9 months. After the formalities of this transaction have run its course, coupled with the ongoing capacity augmentation, your company's cement capacity will then stand at 111.1 million tons, inclusive of its operations in Dubai. In a separate development, your company participated in a bid under the Insolvency and Bankruptcy Code 2016. Your company submitted a resolution plan for acquiring Binani Cement Asset Limited. This is in sync with your company's plan to expand and grow in the markets of Rajasthan and Gujarat. Hearing in the matter is pending before the National Company Law Appellate Tribunal. In the meantime, your company has received the approval from the Competition Commission of India. Having provided you with a brief overview of the major developments during FY 17-18, let me now move to the dividend. Your directors have recommended a dividend of rupees 10.5 per equity share of face value of rupees 10. This entails a cash outgo of rupees 348 crores. Of this, your company will absorb the corporate tax on dividend amounting to rupees 59 crores. I would now like to highlight your company's performance in the first quarter of 18-19. Your company attained net sales of 8,476 crores.
All right, well, on that note, we are going to take a very quick break. On the other side, the government is all set to increase the retirement age of judges. We'll get you details on that story. Welcome back. The Delhi High Court has refused to issue a stay on finalization of the Fortis IHH deal. The details are on your screen. Ashmit is joining in to take us through exactly what the court's stand is on the matter. Ashmit.
Well, Daiji, which has an arbitral award of about 3,500 crore rupees against the Singh brothers, moved the apex court today. Their primary grievance was, their primary prayer was that they're looking for a stay on this transaction, the 4,000 crore transaction between Fortis and IHH. Now, Fortis came out all guns blazing. Fortis clarified before the apex court that the Singh brothers, as of today, have a sub 1% shareholding, that they are an independent corporate entity, that there are other shareholders as well, and that they cannot be held liable for the past actions of former promoters. Having said that, what the Delhi High Court has done is that the Delhi High Court has not granted a stay, but what it has done is that it has issued a notice to Fortis Healthcare. It has impeded Fortis Healthcare. It has directed Fortis to come back and file a reply and has granted an early hearing. The next date of hearing is August 1st. But the big takeaway is an observation that fell from the court. It's not a part of the order. It's an observation that was made by the judge here. He clarified, again, by way of an observation does not become binding. But he clarified before an open court that should the waters be muddied, the court will not refrain from reversing the situation. So that is a word of warning that has been issued by the Delhi High Court to Fortis Healthcare. But speaking of Fortis Healthcare, another important aspect to keep in mind is trademarks, the branding of Fortis Healthcare. That currently rests with RHC Healthcare Management Company and Management Services, I beg your pardon, where the Singh brothers enjoy a majority stake. Now, given that Singh brothers enjoy a majority stake, the Delhi High Court has restricted them from selling or creating any third-party rights as far as the trademark is concerned. So that's another aspect. And thirdly and lastly, all their assets, all their bank accounts, and all their valuables that they own, the Singh brothers, across the world will now have to be submitted, a list of it in a sealed cover before the Delhi High Court. Back to you.
That's one story. That's good news for Fortis. The deal can go on, at least for now, no stay. The other story that our sister network has been tracking, Ashmit, if you could get some details on that as well for us. It seems that the government could be moving a legislation to increase the retirement age of judges.
Well, what our network is essentially picking up is that the government is actively mooting the idea that perhaps increasing the retirement age of High Court and Supreme Court judges could be the answer to the long list of pending cases as well as vacancies across various courts. Now, this falls a few months after, in fact, March of 2018 is when we had a parliamentary panel that was headed by BJP leader Bhupendra Yadav. That panel, the report that had come out in March, had advocated for increasing retirement age of High Court judges from 62 to 65 and Supreme Court judges from 65 to 67. The reason, of course, was to tackle the long list of pending cases as well as vacancies. Now, what the network is picking up is that the government is actively mooting the idea of floating a bill in the monsoon session itself and to get this through. But keep in mind that this would require a constitutional amendment, which, mind you, would require a special majority of both the houses of parliament, a special majority implying two-thirds majority in both the Lok Sabha as well as the Rajya Sabha. So it will be a tedious task. We'll have to wait and see whether or not the government bites the bullet. But as far as implications are concerned, other than the macro picture about pending cases, one aspect that will need to be kept in mind.
Sure, Ashmit. I guess good luck to the government with respect to getting that majority from both the houses. Ashmit, thanks for that. In fact, on that note, let's actually get to the next story that my colleague Parikshit is tracking for us. The 18-day monsoon session kicked off today, and it promises to be a stormy one because there's a no-confidence motion being moved against the government. Parikshit, thanks for joining in. So what are the details and what should we expect over the next couple of days?
Well, the Speaker has agreed to take up the motion of no confidence. It will be taken up for discussion on Friday. There would be voting on the same day as well. The BJP has about 310 members in support of it. That includes all the NDA partners. This is what the BJP is claiming, that there would be no problem as far as this vote of no confidence is concerned, and it will be defeated on the floor of the House. Sonia Gandhi today was highly combative when she was asked whether they really have the numbers. She said, we definitely do have the numbers. So they would be relying on 60-plus MPs of UPA, which includes the Congress, and also the TDP, which has moved this no-confidence motion. This is a pressure tactic. The Congress and the UPA may not succeed at the end of the day, but they would only use to show this, that this is the mood in the parliament, this is the mood in the country, that people want to vote out this government.
All right. Parikshit, thank you for getting us details on that important political story as well. So Friday is the day as far as that no confidence motion goes. We'll take a quick break on that note. All the commodity market action coming up on the other side with Manisha Gupta.